Good morning, good morning. Yes, good to be back, good to be back. We got a new week, new month ahead of us. This is the last month of this quarter, so we got a lot to look forward to. But good to see you guys once again. Hope you all had a fantastic weekend. It was very, very rainy over here in Miami, so hopefully you guys had maybe some better weather. But all right, we'll get started in a few minutes here. But those that are in the chat right now, if you want, while we wait this 1 or 2 minutes, good morning, Brian. Start sending your analysis. Start talking about some of the ideas that you're looking into. Are you more, and you don't even have to go too in depth. You don't have to go too crazy. Just something as simple as like, are you bullish on gold? Bearish on gold? Maybe talk about some of the reasons why. Is it more price points? Is it the daily time frame, the 4-hour time frame? And let's get to talking a little bit about that. But we're gonna do, of course, our top-down analysis. We have a new month. We'll go ahead and look at how that monthly candle closed, and then that way we can get started here. So we'll get started with gold. Make sure we'll take a look at the economic calendar as well. Then we'll get into a US 30. We'll look at USD JPY as well. Those are the main reports that we have been looking at. And I apologize, guys. I've been dealing with a little bit of a sniff, so I apologize if I sniff a little bit too much today. But let's go ahead and get started with the economic calendar. So today, June 1st, we have at 10 in the morning Eastern time, ISM manufacturing PMI. So we'll take a look at that if we're still here trading at 10 in the morning. It's looking like the forecast is 53. We'll see if we can get either a very optimistic or pessimistic report, to keep it simple. Good morning, Marcia. But all right, let's go ahead and we'll worry about that as we get closer to that data report at 10 a.m. But let's go ahead and start by looking at this monthly candle here on gold. So looking at gold, of course, we understand it was very bullish during the beginning months of this year, right? Like January, February. That's when we had very, very strong upside momentum until we started to get the war in the Middle East around those times in March. And you can see we had this very big drop, and we're looking at this on the monthly time frame. Now, obviously, we can see how the momentum and the volume really in comparison to like the beginning of the year has died down a lot. Like, look at the size of those candles. Like, look at this one monthly candle, for example, like the January candle, February, March candle. Those candles are very, very large in comparison to the ones in April or in May, right? But right now on this daily time frame, it just looks like the momentum is still more on the downside, as we have consecutive bearish candles. Looking at this on the weekly, and sorry, just to mention, if we really look at this on the monthly, in terms of like from a macro perspective, looking at gold, this is very, very bullish, of course, right? Like we're very much near all-time highs. Like even though it's still very far, like we're more than 1,000 pips or more than 10,000 pips or more. We're at the 4,500s. The all-time highs is at like the 5,500s, more or less, right? So again, very bullish on that monthly time frame. But again, we just wanted to see how that previous monthly candle closed. Again, a little bit weak. As you can see, it's not a very strong bearish candle. It is a bearish candle, but not very strong, right? Now let's look at the weekly candle, because weekly candle also, it still looks pretty bullish in the sense that we have like a higher high, a higher low, higher high, higher low, higher high. The higher low is still around these lows right here, the 43.50s on this weekly time frame. And then we have this higher high. So looking at this higher high, it's still respecting this higher low that it created around those 43.50s. Really like this weekly low right here, this previous weekly high. Also like kind of where in the past we went and reacted off of that area, right? So again, weekly still looks pretty bullish, but again, the momentum you can clearly see is towards the downside right now. And then we got the daily time frame. Now we're gonna start to mark off our zones. but the daily time frame looks bearish in my opinion, just based off this strong drop that we had here in this new low that got created for us. This was our pullback, and then the continuation right here as well. As you can see, we're creating new lows each time without breaking above significant key areas. So for example, this would be our last lower low right here. This is our lower low, and when we see where this lower low came from, that's this lower high at the 45.74s, right? So this resistance high on this daily time frame, that's what we're going to mark off as our resistance, our daily resistance. And it's also a structure point where you can see the previous day, that's where price got to 45.75s, a little bit higher, 45.90s, but it rejected that area, so it stayed below this area of resistance, meaning sellers are still very much active at those areas of interest there. I'm going to mark off the lows as well. So around the 44.60s, those are going to be our daily zones. And then also these lows, the 43.70, 78, 75s, more or less around that area. We'll refine it if we have to on the 4 hour now. But we have our high at the 45.72s, that's a daily time frame. Our lows at on the daily 44.55s, and then also 43.75s. Now again, that's more still on the bearish side as we continue to trade below 45.75. So our daily time frame is more on the bearish side. 4 hour looks more bullish because of the fact that we're trading above this area of interest right here, the 44.55s. That is where the last lower low point got from. So this was the structure point that we needed to respect and maintain below to stay more on the bearish side on the 4 hour. So now you can see we're trading above that area. We have a new area of interest, which it looks like we're creating here. This area of support, where it seems buyers have stepped in the past, where if we look at this on the whiteboard, let's look at this just really quickly, guys. This is the 4 hour, by the way, guys, and we're looking at structure points. We're looking at the technicals right now, just making sure we have all the correct zones and everything that we need to be prepared for. So what we're looking at right now is this current area that we just marked off, just near the 44.95s, more or less, right? Let me see, just to get it more precise. Yeah, 44.95s, just basically this 4 hour candle lows right here, where we saw this break above, this retest, and then the continuation. But not only that, like I've always told you guys, point out the area and see the reactions that you've had there off the past. So you see right here, for example, trading above that zone and rejecting that zone, and buyers continue to be more active. You see, for example, here, once price got back above the area of interest, look at the break above the retest, again above that area, very much near those 4500s. So we know that that's a significant price point that we've been paying attention to for the past couple of weeks, the 4500. So we're pretty much back around that area. Obviously adjusting to the current price action. We're not gonna use the 4500s precisely, but we'll use the zones that we're at right now, which is again the 44.95s, more or less. So that's the zone that if we can maintain above that by looking at like the 4 hour, and also we'll look at the 1 hour now, we're still more bullish, right? We're still more influenced on the bullish side. So we can be on the lookout just by following this structure for further rejection plays off these lows for continued buys back into these highs at the 45.80s right here, right? To kind of get a repetition of what we've seen in the past, which is, again, price action above our area of interest. And it, for the most part, has reached this area each time. Like this time when it rejected off of this drop and it got to these highs and it created that high point for us, that's where it stopped before you had the continuation. When you got above this zone, or let's say you had this pushback, it got precisely to that area once more, around those 45.75s, right? These high points. Same as here, once we rejected, once again, we got to these highs again, right? So you guys get the idea. Every time we've gotten above that zone, if we have good volume and momentum, we do end up making our way towards the upside. So it makes it very simple for us, where we're just following right now like the 4 hour candle, the 4 hour structure, being more on the bullish side, It'll be as simple as like if this 4-hour candle within the next 20 minutes can close above this area of interest, what we have to look out for is no further breaks below our areas, right? Because at that point, for sells to be valid, it would have to be pullbacks below our area of interest, but we need to see candle closures below the zone, right? We need to get candle closures below the zone to start to break out of that structure and out of that momentum for us to watch out for any sort of pullbacks. But if we don't get candle closures back below the zone, like we got here, look at how you get candle closures below the zone and then you make your push down. If not, you end up rejecting and you push towards the upside. Same here, candles close below the area and you had a push down. This was a very volatile push lower. But again, you still get the idea that it's below our zone of interest there, right? So we shouldn't even be thinking of sells unless we get the candle closer below this area, or unless we even get back into the 45.80s and start to reject. So we won't even be worried about sells unless one of those two things happen. We'd be more on the lookout for those buys, which is gonna be rejections as we're getting right now, failure to really break through and maintaining above our area of interest. And let's continue to follow this bullish bias that we have on gold. The only thing really that's keeping me on the bearish side is the fact that we still have the war in the Middle East and that conflict still very much active. And we know that as long as that conflict remains active, then there's still going to be fears of inflation being a problem in the near future. And how we understand how the Fed has been handling this is that, well, if inflation is going to be a problem, they're thinking of hiking interest rates. And when you think about hiking interest rates, that's more so more strengthening or more strength for dollar itself. And we know that can pressure gold. So we know that'll be the case once we're trading below our area of interest. If we can't even trade below that area of interest, let's not even be worried about that. Let's just follow the price action. Let's follow the buyers that are more in control, again, above those 44.95s. And we'll look for an extension back up into like at least the 45.40s, and we'll take it level by level. 45.40s, if we break above that, 45.80s, right? That's plenty of opportunity to be on the lookout for some moves. That's over 700 pips right there. So good morning, guys. Good morning, Paul, Marcia, Brian, AD. Good to see you guys once again. Hope you all had a fantastic weekend. Good morning, Kim. Let me see, AD. I'm not trading today or tomorrow. I'm working on developing discipline and learning more about news, bond yields. I'm going to only focus on price action like you, but I need to stop trading so much. Okay, that's good. If you know that you have been trading maybe too much, you've been too active with the markets, you'd be surprised what one day break will do to your head. You know, your brain can clear up. You might be a little bit foggy. I don't want to say you're addicted to the markets. You know, I don't want to go as far as that. But if you know you're taking too much trades, then maybe right now your brain is wired for activity. And every time you step into the markets, you feel like you might need to be active. So you definitely need to be aware of that. Again, as if you're sending me that text, then that means you are. So that's a good step right there. I took, sheesh, that is a lot of trades. Yeah, over 100 trades. That's a lot of trades. Even if it's scalps, like I know some people that are, let's say, you know, hyper scalpers, and they'll trade about 5 times or more, you know, like 5-6 times or more, you know, like separating their risk, of course. But still 100 times, that's a lot. You know, I would say as a scalper, I think 5 trades is already a lot. You know, if you're taking like quick moves, you know, 15 pips, 20 pips here and there, depending on where you're trading, 5 trades per day is already a lot. You know, because that'll add up by the end of the week. You know, by the end of the week, you'll be up 20, 30 trades already. So if you're above that, again, not to judge or anything because you're being self-aware, but you have to be careful. The less activity, I've learned that less activity in the markets will sometimes, or at least for me, has worked way more. You know, less activity equals more profit in the markets, which is contrary to what a lot of people might think. A lot of people might think the more trades you take, the more chances you have at taking profit, but it's actually the opposite. That's, if anything, the more chance you have at losing with the market. So you only want to be active in the market when you know there's an edge present, when you know you have good conditions in your favor. If not, if you're just going for everything, then it's going to be very hard to keep up with what actually works and what doesn't. Trading really is a steady game. Like, let me ask you guys, there's a few of you right now in the chat. How long have you guys been trading? And be honest. And that is, if you want to tell me, how long have you known about trading? Like, for example, I knew about trading since 2018. And I kind of started studying it in 2019. But I didn't really start to trade like real money. Like, I had traded a little bit maybe in like 2020, 21, but like not that much. I'm talking like, when did you actually go from studying the markets, maybe a little bit more trading and not too serious of trading, to then actually say, you know what, I'm gonna put a few hundred or a few thousand into a live broker and I'm gonna trade this strategy. Like for me, that was in 2022. You know, when I really, because in 2020, when I really got into like trading, obviously I know for the most part, a lot of people got into trading like during the pandemic. For me, I knew about trading since 2018, but I had learned about it. I wasn't too crazy about it. Then 2019 came around. I got into a little bit more of price action, but I still wasn't very familiar with what I was doing. And then 2020 came around. And for me personally, I had lost my job around that time. So I really had nothing else to do other than be on the computer and study the charts. And at that time in 2020, when everybody was at home, that's when I believe, you know, the YouTube trading and all of that really started to pop off. And there was a bunch of live streamers, but I was learning very, very basic stuff, right? But again, from 2020, learning basics and really getting into trading all the way until 2022, that's when I really deposited money and really started to put money behind like my ideas. So I want to know, what have you guys been doing? Like, how long have you guys been active, just trading, studying, both combined? That way I know what type of experience you guys might have. And there's no shame. If you guys have been involved for 1 month, there's no shame in that at all. Whether it's 1 month, I'm a chart addict. Okay, but there you go. You see, that makes a little bit more sense for me. You've been in the markets for 5 months, and this is what you're dealing with right now. If anything, this is good. This is good because this is early on. My boy Akosh, good to see you. What's up, brother? Good morning. But again, like I was saying, you took a lot of trades last week, and you're being very honest about it, which again, this is very good. You're not trying to hide or anything like that. You're being self-aware. And again, you're very new into the markets. This is good because you can get through this right now. I will say, you already right now, you're saying that's definitely too much. I'm sure over 100 trades in a week is, for the brain, that's far too much. I'm sure that's back and forth. That's taking like over 10 trades per day. And again, I don't judge because I've been there. I've taken 10 trades per day. I don't think I've gotten over 20 trades, to be honest. But that's me trading on a $500 account, risking $5 each time. You know, do that 20 times. It's gonna add up. You're gonna blow your account. You get me? So that's the dangers of that type of trading right there. You get me? But again, it's good that you're self-aware. At this point, just calm down, like you said. Calm down. Definitely, I will say, definitely don't trade today. No matter the opportunity you might think is gonna come, no matter what. If you already told yourself this morning, I'm not gonna trade today, and if you walk out later today and you know you took another 10 trades, now you know what you need to work on. At that point, it's like, okay, let's not even be too worried about other things other than the fact that I need to be more disciplined. I need to be more patient. And if you don't mind me asking, how old are you? 21 years on and off? Okay, that's a lot. You got years in the game. I hope that I am able to teach you a thing or two and give you some of my experience and give you some more insights on this. Let me see. Kosh, what's up, Tarzan? Kim Allen, 2019, not consistent enough. The last 6 months I've been locked in, so pretty much this entire year you've been locked in. Okay, that's good. I understand that. It's all good. You know, life life sometimes it's difficult to get around, especially the markets. You got to put time into this. You got to study, especially like when you're just starting out. You want to make sure you focus on learning. You want to make sure you focus on studying price action. Like, yes, of course, it's very, you need to, I would say, build a routine around getting in front of the charts every day around the same time. Don't be the trader that's going to be here and you're going to trade New York session today, London session tomorrow, New York and Asia session the day after. Like, don't be that person. Make sure you build a routine that every day you do New York at 8 a.m. Then do that. You got 8 a.m. because for example, you have 8 a.m. New York open. You could do your pre-market analysis. You know that we're gonna be live at 8:30, so you can join the lives at 8:30. We'll prep ourselves to go into NYSE, which is what we're doing right now, right? Like we have about 9 minutes until this 4-hour candle closes, and then we have another 30 minutes until NYSE opens, right? But we have gold prepared. We're of course gonna dive a little bit deeper into like the lower time frames, the momentum. We'll go into that, but I wanted to know a little bit more about you guys and how long you've been trading, how experienced, and those of you that are also shooting answers, how experienced do you guys think you are? Like what's the confidence level like? Do you think you got this? Because trust me, at 6 months even, I thought I got this. And every time I would learn a new concept, I would think, oof, I could use that concept and I want to be profitable. And you have this constant belief that it's like, okay, next month I'll be profitable, next month, the next month, the next month. I was very young, of course. And so, again, you don't want to get caught up in that delusion. You want to make sure instead you are becoming that person that you need to be, Like if okay, to become a professional trader, a profitable trader, I need to build a consistent routine. I need to have a trading plan. I need to have my pre-market analysis. I need to execute on the ideas that I put out. I need to journal. I need to have good sleep. I need to have good habits, right? If those are those things that you need to do, then focus on doing that. Don't worry about becoming a profitable trader. Just become that person, The result will follow. And I know that through just personal experience. And I've talked to so many people that trading it can get a lot deeper than just the charts itself. Like you really have to, understand yourself, understand who you are, what type of trader you are, who you want to be, who you're learning from, who you're paying attention to, who you trust, who you don't trust. But then you watch multiple traders, right? Like all of these things you need to question. But like a coach said, back test as much as you can. That's also good, but it gets to a certain point that it's way more important to test your strategies in live, because back testing is only so good when you have like a new strategy or you have a few new things that you will need to test. Yeah, for sure, back test. But what really builds that consistency is showing up every day and doing the same thing every day. So like my friend AD, you have to stop with the over trading. That's for fact. If anything, that's what I'm gonna hold you accountable to this week. By the end of this week, I'm gonna ask you, and I want you to be honest, like how many trades did you take? Because if you can go from 100 trades down to 25 trades, which is still a lot of trades, I think, at least that's a step in progress. I would say go as far as like, try and aim for max 5. Maybe do, if anything, give yourself a daily limit. Don't worry about the week so much. Give yourself a daily limit that you don't take more than 2 losing trades, or if you have 1 loss, 1 break even, okay, maybe you could take 1 more trade, maybe, all right? Depends. If you get 1 win, like I always tell people, 1 win, stop for the day. Don't go 1 win and then try and take another trade and end up with a break even or end up with a loss. Just 1 win and you're good for the day. But again, try to aim for that alone. Just, what, if I'm gonna trade today, because today I feel that my emotions are good, I have my strategy set up. I don't like the word strategy, but more system. I have my system in place. I know I can follow that. Let me follow through on that. I'm gonna give myself 2 trades today, and I'm not gonna take any trades before 9 in the morning. That way you know, okay, I don't take any trades before 9 a.m. So your brain is not even worried about that. And you know, after 9 a.m., you have a 4-hour candle close, 1-hour candle close, 30-minute candle close. Let's see how that close, whether it's in your favor or not. If it's in your favor, okay, look to see what you need to see next to take that trade, you know? And then see if that aligns. And then follow through with that. Give yourself that time. Like a lot of times you might be thinking like, especially, and I apologize if I might be pushing you into a certain direction with trading, but be careful with the lower time frames. You know, every time that we look at those at that 1 minute, I always tell you guys, hey, be careful with the 1 minute, because the 1 minute might make you think that the move is going to happen now, and you see candles moving up and down and you want to react quick. Remember, the 1 minute is more so to get a view of the lower time frames and really that current price action. You don't have to go crazy and trade it always, you know. Again, it's good for us to see. We're going to do that in just a second. I just want to make sure I get through the chat really quick. But we'll look at the lower time frames, and again, don't go crazy with that. Something that used to help me a lot when I first started getting into the 1 minute, because the 1 minute used to make me enter trades in and out, 3 trades in like 5 minutes, super quick. And it's like I did so much, and I just fried my brain of that decision making that I need to have. And then before you know it, it's just, again, your brain is all messed up from those decisions that you made. What I used to tell myself is, if my strategy tells me, or if my game plan tells me, you need to wait and have a 15-minute candle closure in your favor, then that means that without a 15-minute candle closing in my favor, I shouldn't even be thinking of taking a trade. So that right there, if you know, okay, I need to wait for this 4-hour candle to close, and you have 3 minutes left, but your brain is itching because you want to take a trade right now, you need to learn how to follow through and wait for those extra 3 minutes. And you need to, because that's what your game plan says. Remember that key part right there. If your game plan says so, you follow what your game plan says. You need to be able to check that off in the checklist, because you need to find out whether or not that actually works. So again, now you know, okay, if I have 3 minutes left and I want to take a trade right now, I'm not even gonna bother. If I need to step away, I'm gonna step away. I used to do that as well. I would physically stand up from my desk, walk somewhere, whether it was the bathroom and whatever, the kitchen, balcony, backyard, wherever. Just step away from the market for 3 minutes, 2 minutes, come back, see how that 4-hour candle closes, and teach yourself to wait. Teach yourself to be more patient for the things that you need to be patient for. You don't want to be too patient either, and then you're just waiting around for everything to happen and then you do nothing, right? You find that balance, but you find that balance through studying your game plan and your actions in the market. That's what's really key here, okay? So again, I appreciate you guys for your honesty. I'm always gonna be here to hold you guys accountable. So now I know I have a few names that I know I need to look out for the remainder of the week, and I hope that you can be honest, and I very much appreciate your honesty ahead of time, so that way we can actually sit here and grow and not waste anybody's time, including yours, myself as well. We don't want to just sit here and do random things, all right? But let me read this really quick, guys, and then let's go back to the charts, because we have the 4-hour candle closing. And I want to make sure we have the lower time frame set up as well on gold, and then we're going to look at US 30 and move on. Brian, I started in 2023, I started learning, but been active 1 year and still learning, but I feel like I need to put the right type of work. What does that mean? What do you mean by I need to put the right type of work? You feel you're not doing enough? What are you doing right now that makes you think that? And Marcia, this will be the last one I read, and then if you guys want, like I said, just answer me that, Brian, and then I'll get back to that once we analyze the markets here. Marcia, I started with options mid-2019. I never finished the program. It seemed complicated and I gave up. And then I started taking signals, and this year I decided to lock in. Well, I'm happy to be a part of your journey. And like I've always told you guys, any type of questions, if there's any type of guidance that you guys might need, I'll be happy to help. Of course, you can always ask me here or reach out to me in the GatesFX Instagram, or you guys have my Instagram as well. But all right, guys. Brian, I want to know a little bit more about what you were saying, but let me get back to the lower time frames here. So, like we were saying, above those 44.95s on gold, we have seen buyers step in above that area, it does seem like we're still very much maintaining that zone, and we don't have very strong buying pressure from what it looks like here, just based off of how this 4 hour is going to close. The 4 hour candle, it looks like it's going to close bullish, a little bit weak, you know, not the strongest candle, but we're still above our area of interest, right? This still continues to validate that bullish bias because of the fact that price, as you can see, reached these lows, but we really failed. It looks like well, now we can confirm it. We failed to close below that area. So that's not signaling to us for the moment that we have any sort of strong signs of selling pressure, of sellers being active in the market. We know that that'll be below those 44.90s. For the moment, we don't have that. We'd have to see either a flush through below those lows, you know, mixed with candle closures below, and then retest of this area, and then really reject and fail to get above to really look out for those sells. But that right now is not anything that we're worried about, again, because we don't have the candle closes below. We don't have the pushes below either. We just have rejections on the lower time frames. And now looking at this on the actual lower time frames, because that's more the intraday. When we look at the 1 hour and like the 30-minute and the 4 hour as well, that's more so the intraday time frames. But let's look at this on the 5-minute really quick. So again, you can see on the 5 how for this the past couple of hours we've been on this push down, right? We've been moving lower, but we've rejected and we've reacted now multiple times off of this area. So what we'll do is we'll mark off these highs. This is going to be the momentum highs right here, where ideally we start to break above that area without breaking these lows. I'm pretty sure you guys have seen me do this, where I mark off the lows and the highs, the most recent ones on the lower time frames. So for example, that'll be the 44.90s basically, the lows, and then the 45.12s, the highs. So what I want to see from buyers, let's zoom in a little bit more here. What we need to see now is something similar, of course, to what we saw here, right? We want to see bullish structure being created for our buys to get validated. So for one, we need to get the rejections off of this area, which is what we're getting right now. We've gotten the rejections off of this area. We need to get the failure to push below, which is, again, we've also seen that. We have not seen price push below or like any sort of strong sellers coming in to invalidate our bias. It still looks like price action, again, after this drop, it has paused here, right? It's stopping at this area. So it is giving us that exhaustion that we want to see. So we're getting the exhaustion, that's one. 4 hour candles and intraday time frames and lower time frames are still very much closing above our area of interest. So for buys, that's still valid above this zone. So whether you're in buys or waiting for buys, again, since you have not broken those lows, those 44.90s lows, then this is still a possible idea. What we want to see now for momentum to pick up is we got to start to shift out of this bearish structure, what we're on right now. So I'll put out these little channels every once in a while, so that way you guys can visually see that as well. But again, the trend on those lower time frame and that momentum is still towards the downside, because we have not broken above, like for example, like these areas here, or now these new highs that just got created. We want to make sure we reject this area, but then we also want to make sure we get above our areas of interest, so that way we can start to create bullish structure against this bearish structure that is leading down, right? Because right now, what we want to avoid is, we want to avoid price action doing any sort of sweep of the lows. Because if we start to break those lows, then just based off that momentum that we're seeing, then again, that's where we can see that stronger push down. The reason why I'm not leaning towards sells at this area, we're seeing still more rejections. Why I'm not automatically leaning towards sells based off the momentum is because of the higher time frames, like the daily, the 4 hour and the 1 hour being more on the bullish side. That's why I'm not immediately really looking out for sells right now. And the fact that we haven't really been seeing any sort of strong sellers. I would be wrong when price breaks those lows. That's why I said, if we break those lows, and then give us retests, that's where it's a lot more valid to look out for sells at the retest when it breaks those lows. Because we would want our buys to get invalidated, so we have proof that sellers are strong, and then we'd want to get the retest for a risk to reward, of course, you get me? But at least for breakouts, I wouldn't want to try and sell a breakout when I've seen that price action in the past at this area has rejected so many times. So I wouldn't want to get caught trying to trade the breakout or waiting for that, and then I end up just getting faked out, and then price action ends up bouncing, you know, because it's following still those higher time frame pictures that we were looking at. So for the moment, we're still rejecting. You know, right now price action just went and retested that area. So risk to reward is still there. The buy opportunity is still there. We just at this point want to get above those 45.10s. So again, that's on the lower time frames on gold. You know, even zooming in a little bit more, let's get a little bit more technical here and see if price action can start to actually trade a trend cleanly. Another thing I notice here is, like, again, if we don't break the lows, so we need to make sure we do not break those lows right here. We see how, for example, where these lows came from, it looks like it was from this area right here, like this high right here that got created. It was like, you see the low, the high, a low, equal high, and then basically an equal low. But that's coming from this little lower time frame zone, right? It's not an area of significance or anything like that. I'm just pointing out how we got there, like the momentum that got there. We're starting to push, or we're starting to break above this minor area here. Again, this is a lower time frame. We're just getting technical on the lower time frames. It's not too much of significance. But what I would want to see is the fact that now we've broken above this area is, again, we want to get above our area of interest, because at that point we could be making highs, higher lows, higher highs, and then the continuation above. You get me? Against this bearish structure that was being created. Again, all of that could be invalidated if we break those lows. If we break those lows, then at that point the buys, of course, would be invalidated. You would have to be patient. But so far, I do like the fact that we've reached that area now twice and we've rejected. This is now our third attempt of price reaching this area on these lower time frames. Let's make sure we get, for example, the 5 and the next 15-minute candle to close above. So like this is the 5-minute that we're looking at here. 5 minutes still closing with rejections. We want to make sure that the 15-minute time frame is also closing above. Because the other thing is, look at also the 15-minute time frame. Let's zoom in here a little bit more. If we look at the 15-minute time frame, we have, again, the bearish structure on the way down, this low, this high, low, high, and this is our low. So our last high point was this one. That's basically what I was pointing out on the lower time frames right now. Again, not an extremely like an important area or anything like that, but it's still a structured point on the lower time frame, and we're starting to get above that area. So I want to start to show signs of reversals. To show signs of reversals, we have to make sure we don't get any continuation, the lows. I know I'm repeating myself, but I'm explaining it to you guys in different time frames. This is what we want to see, the rejections we're getting right now. But then we need to get back into this high and then back above that zone. Because at that point, again, we would be reversing against the lower time frames and starting to turn more bullish there. So we're still rejecting. That's still good. It's still very much in favor of that. Those buys are still valid. We just, of course, we want to see the follow through above our areas of interest there. So now we got that with gold. I believe we can move on to US 30. The other thing that's also that I apologize, I didn't mention earlier, was the fact that dollar had momentarily broken below our 99s price point, which is our area of interest, if you guys remember. The 99s was at this area right here. We obviously saw how bullish gold got over the past couple of days, but that didn't hold too much on dollar. And dollar is now back above those 99s. So showing strength. Again, that'll be valid for us to follow in terms of correlation if we go and break those lows. Okay? That'll be that's like the one thing that's kind of also going against this bullish bias. But still, in my opinion, above 44.95s, as we're continuing to do, as we're continuing to reject, we're still very much on that bullish bias. I'm gonna stick with that for today. Again, unless we break those lows, and then we'll wait for candle closures below to really invalidate that for us, all right? I just wanted to point that out to be careful with that in case you do go break those lows, excuse me. But all right, let's go ahead and look at US 30. US 30 looks pretty simple, guys. We'll just go ahead and do the top-down analysis. But it looks fairly simple in terms of the technicals here. Looking at the technicals on US 30, we have a few zones to mark off. We can mark off these previous highs right here. We have these lows and these lows right here. That's US 30. So it'll be 51,037, 50,655, and then 50,400s. Those are the main areas on US 30. Let's look at that on the 4-hour and make sure. Okay, I think that looks good. Maybe this one can get adjusted a little bit. So I'm gonna adjust the 50,650s is the area that I'm gonna mark off. It's gonna be these lows right here, where price action, as you can see, we created this support and then used that support as an area where buyers stepped in and pushed price higher. The other area we can mark off is these highs, 51,220s. This is on the 4-hour we're looking at. So we have our support right here, previous resistance, support, previous resistance. And then same with this is a support really. Let's look at this on the 1-hour. So everything looks bullish so far. Daily, 4-hour, 1-hour as well looks bullish, unless it trades below. Let me just remake that zone there. I'm gonna mark off these lows. So 51,000 and 50s is the area. On the 1-hour on US 30, it's more bullish. Oh gosh, it's more bullish above this zone, above the 51,000s and 50s right here. That's where it's more bullish. But on this 1-hour, again, look at where the last high came from. It would be this low point. This higher low is where we got this push from. This we can move towards these highs. And then we have these lows around the 50,925s. Damn, we have a ton of volatility right now on US 30. But right, above that area, that's where you're going to be more bullish. But anything below that, as you can see right here, very, very strong selling pressure coming in. That's obviously easy to say in hindsight. This is going to be the next area to be on the lookout for, just based off of what we're seeing on this drop right now. The momentum is clearly on the bear side. This is not even NYSE open. We're still, more than 15 minutes from NYSE open. But this would be your area to watch for, that 1-hour low right here, 50,925s. Watch reactions at that zone, where above that, if we get rejections off that area and we can establish support, we can be on the lookout for buys above that. But if not, just based off this momentum, in case price action is going to sell off here on US 30, you can watch for the continued sell-off below the 50,920s. That would be that. That's, to just looking at the technicals here on US 30. Below that, we have plenty of range to just possibly correct and move lower even. So we're not bullish until it's back above this area here, or rejections off of these lows really. But with this momentum that we're seeing right now, watch out for those continued breaks, because we're seeing a ton of momentum there. I'm thinking, you know what could be happening right now based off what we're seeing, based off this gold drop that we just got and this drop that we're getting on US 30. We could be getting more. Let me see if the dollar also reacted. we could be seeing more, what's it called? More escalations in the conflict. Dollar also skyrocketed right now. You see that? You see how that's all correlated right now at the same exact time? And we know what where those strong moves have been coming from. So we're seeing dollar climbing right now very strongly. Gold completely broke the lows and invalidated our bias. At the same time that US 30 is having a drop, I'm thinking we're seeing escalations going on right now. And we need to adapt to that price action, which is again the dollar strength. So that's for one. So let's pay close attention to this, guys, because this is happening in real time. So yeah, so we have that dollar strength. We have US 30 weakness. And then we have gold weakening as well. So even based off the technicals, we knew what we were prepared for beforehand. So again, our buy analysis got invalidated by this strong push that we got below those lows. Again, this 100% had to be fundamentally driven. And I'm gonna be on the lookout here for articles. And if you guys are on like any sort of news as well, so that way you guys can check that out. But we know we had our areas marked off already. So we know below 44.95s, if we can get a retest of that and rejections, let's look for rejection plays on gold and then further sells on US 30 below our areas of interest. So that would be below 51,000s and 50s, and then further pushes below the 50,925s. Adapting to this current price action, guys. We're gonna be on the lookout for those articles. I'll let you know if I find anything here. But yeah, adapt to that. I'm gonna leave this here on gold. I want to see if gold will give. That's the thing. That's the thing with these markets. You have to be prepared for both ways, both scenarios. You never know what can happen. Yeah, you see, I'm seeing already some articles, literally exactly that. We're getting escalations right now in the Middle East. I just see something right now in the New York Times. Yeah, the recent attacks threaten to further complicate talks to end the war. So any sort of peace talks or any sort of ceasefire deals that are in the mix right now. All right, let's see. Do you take volume into consideration when analyzing bullish or bearish sentiment or RSI divergence for early? No indicators. AD, I appreciate you for answering me there. As we were breaking down US 30, we were reacting to that as we speak. But again, guys, pay attention to these levels that we have listed here on gold, as we're getting a ton more of volatility. So we know we're waiting for sells below those 44.95s. Right now we're reacting off of this area right here, which is, we know, a previous low point. So anything below these two zones still validate a more bearish bias on gold, with the recent reaction that we just got off of dollar and we got on US 30, and with the updates that I'm seeing here with the war in the Middle East. Like Iran, let me see, about 17 minutes ago, Iran launched 2 ballistic missiles targeting American forces based in Kuwait early Monday local time. So the US military said, further rattling the already shaky ceasefire in the Middle East. So remember what we talked about at the beginning of this session. Any sort of further conflicts in the Middle East, we know that that's gonna add to the inflation pressures, which in turn can strengthen dollar because of the fact that the Fed will turn more hawkish, and therefore we could see more dollar strength and gold weakness. So below our zone of interest right now, we got the breakout. We got an aggressive retest. Looks like price action right now is trying to make its way back down. And then US 30, let's look at that really quick. US 30 also gave a clean, is giving clean retest, very aggressive. You notice the difference in the volatility and the volume right there as we get fundamental information into the market and as the markets start to price that in live in front of us, guys. So you guys see that there. Let me see. Okay, I apologize. Where was I now? Let's leave this on US 30. Or excuse me, let's leave this on gold. All right, AD, I appreciate you. Yeah, only price action, technicals, and fundamentals. Zero indicators. We don't do any indicators at all. Just price action, fundamentals. That's what we do. We just look at that data, that information. Marcia, I'm looking at the 1 hour time frame. The zone currently is around 45.13. Okay. 44.89. That's a pretty large zone. From 44.89 to 45.18. That's a pretty large zone. My confusion is what time frame to mark my zones. Focus on, mark your zones on the daily, the 4 and the 1. So what I do is I mark the daily time frames first. So like we did in the stream. You can always rewatch it as well so you can see that. Because today we did a top-down analysis. Usually we'll do top-down analysis for the most part, unless you guys ask to do it every day. We do it at the beginning of the week. And then we usually will use around the same zones, depending on price action, of course. Well, right now we're seeing very strong pushes below our areas, guys. So, and we saw the updates there that we were talking about, and we were on point. We called that even before the articles came out. So you see how if you're aware of those market reactions, you more or less know what's going on based off the current narrative. So even before we saw the articles, we called them. We said that that's most likely continued conflicts going on in the Middle East, and then literally we got the updates right there. But all right, so sorry, I was answering your question. So yeah, mark it off on the daily, refine it on the 4. So like the same zones that you marked off on the daily, make them a little bit smaller if possible. Usually it's possible on the 4 hour. And what I'm marking off, as you can see, I'm mainly marking off where the candles are closing. If I can get wicks into that zone, more or less, then that's good. So for example, this resistance would be from 45.72 to around 45.79, because I'm covering kind of like these wicks. I know it's more or less around that area, that range, those highs that I need to be careful with. Same with the lows. You can see I'm, for example, marking off these current candle body lows, the current price action. That's another thing that you have to pay attention to. Current price action, make sure it aligns with your current price action. You don't want to mark off an old zone and ignore the current zone. Mark off the current zone and see if it can align with the previous zone. You get me? So again, this is 4 hour candle lows, and you can see it's the candle body lows as well as the wick rejections. So it's a mix of both, and it leaves it very clean. It leaves it super nice. In my opinion, it's not very messy. That's why I don't do indicators. It's just more so price action, and it's clean. You have the wick rejections as well to the left. You can see it. But again, I'm basing it more so off the candle bodies right now. And you can, I think this also, I don't want to confuse you. This comes with a little bit of experience, because just based off of hearing the answer that I'm giving you, it sounds a little bit like it's, I'm not giving you a precise answer. But I will say, focus on the candle bodies. And if those candle bodies can align to previous wicks, kind of like what you see here, this is candle bodies, current candle bodies, it also aligns with previous wicks. That's for one. You know that that's still, again, the overall zone, where around that area, you do have price reacting. Same with this right here. Candle bodies, the wick rejections. Same right here. Candle bodies, wicks. So it's around that same, it's the same concept. Same right here, look, candle bodies, you have wicks in there. Again, it's not going to be 1,000% precise. Nothing like that. So be aware of that, of course. But all right, US 30 is making it made a very nice move, a break, retest, continuation. Watch for any sort of continuations. If we're gonna have strong volume, then the continuations will come below that zone. And then same with gold. Gold, they basically did the same thing, just a little bit more aggressive because it didn't break below and then get into the 44.95s. It more so got into the 90s, 44.90s, which is another lower time frame area that we marked. So it was a little bit more aggressive, but again, we still were on point in terms of like the reaction and where, even if we didn't know like the fundamentals as fast as we found out today, we still understood based off the reaction how what the markets were reacting to. So we were still pretty much on point with that. And then still with the zones that we had marked off, again, still pretty much valid in terms of like how the sells played out, but below the area. Again, it was just very aggressive because of the fact that the news event came in, and that is what really invalidated that bullish bias that we had above our area of significance there. So we completely flushed through. It wasn't one of those trade setups where you got to wait for a candle to close below and then it retested and then you went for the trade. It was more so one of those fast paced, some new information got to the market, and you can see just how fast those moves take place. You saw it on US 30, you saw it on gold, you saw it on dollar. You saw it on multiple asset classes there at the same time. But as dollar continues to strengthen, we know that gold is likely to continue getting pressured. So again, at this point, really what we can do is wait for any sort of retest, for better entry confirmations, or let's just wait for those continuations there. But Marcia, did that answer your questions for the like how you mark off your zones? And again, also look at how big the zones are. Like they're not that big. So it's like from 44. This one is from 44.60 to like 44.53. So that one is like 70 pips. That's still pretty large of a range, but you don't want to make it that big. Like 50 pips more or less, because of the fact that, you know, gold is so strong. There's so much more volume. I just started learning about market structure. Marcia, that's what you're learning. That's what you meant, right? I just started learning about market structure, never late than never. And also, why is it important for candle closures? Does it tell us what the market will do? No, it doesn't tell us what the market will do, but it gives us an understanding of who is more in control at the moment. You know? Like based off of candle closures, you're able to see who was in control during that specific time frame. So that's why we do top-down analysis from the top to the bottom, you know? We want to see who's stronger first, and then as we get down into the lower time frames, it gets weaker and weaker. Almost to say like it's more credible to follow the daily than it is to follow the 1 minute. They both can very much align, and you can use both, but you need to know how to use one or the other. Like you got to know how to use the daily, and then you also got to know how to use the 1 minute, which is again what we do in this live stream, which is we look at the daily for more our zones. We do it for a macro overview, so we understand what the higher time frames are doing, right? And then as we dive into the lower time frames, that's when we start to see more information. Same thing, but just more information. You know, the candle closures, for example, like look at how I would just try and give you a very clean and easy example that I can notice right here. It's again, remember that this is a concept. So of course you need to back test this yourself, see it for yourself. This is not like a law. There's no laws in the market, you know, that it's like, oh, if this exists, then that has to happen. There's no such thing as that in the markets. That's why I use technicals and fundamentals, because it's like the closest thing you have to just using data alone. That, and like there's also other tools like order flow tools, right? I'm sure you guys have heard of that. Order flow tools will also give you more data and information. We don't use made up strategies. We use some more data. From that data itself, from technicals, from fundamentals, we then build game plans, right? Or strategies. You know, you guys know I don't like that word, but strategies and systems using data, and then everybody has their own. Somebody does breakouts, somebody does rejection plays, somebody does breakouts and rejections, somebody does reverse, you know, everybody has their own thing, but it's still data that we get from the same chart. So for example, when it comes to candle closures, this would be right here an example of why you want to pay attention to candle closures. So I hope that you're able to see. I think you can. So here you have candle wicks being left at your area of interest. That's a wick. So when you have your wicks, that's basically the area where price tried to reach, or excuse me, it did reach, but failed to close near that area. So whether it's a wick high or a wick low, that's where price reached, but again, it did not stay at that area. Versus the candle closure, that's where you're getting that final decision, right? That's where you're getting that final say in the current price action. So the idea behind candle closures is that you want to see candle closures in your favor, so that way you have price action validating the idea that sellers or buyers are more in favor of your bias. So say you're looking out for sells and you're looking at this area of interest right here. Let's just say that was an area of interest at that time. You'd want to wait for candles to close below your area of interest. So you know whatever sellers are in the market, they're clearly pushing price below my area of interest. That means below my area of interest, there is buyers interested in keeping price below that area. If it's below that area, I can sell and target another area, right? That's the main idea. Same, it works the same vice versa. If you want to look for buys, you want to wait for candles to close in your favor, so above your zone, so you can validate that whatever sellers were in this area are being overpowered by the buyers that are in the market at that time. So you want to get the candle closures to close in your favor, so that way you know at this time that I'm looking at price action, I know who is more in control, excuse me. So notice how, for example, you have wicks rejecting and no follow through, right? Look at this wick rejection and the close above. You did not get the follow through until when? The candle closed below your area of interest. Notice how when you finally get the candle closure below, yes, you still had a little bit of a minor push above, but you didn't really break like the structure that you were on. Like you didn't really kill this momentum, right? Again, it's not always going to be perfect, but the idea is the candle closes below, and then once it closes below, just a few hours afterwards, it did make a move down. And then again, the same thing works vice versa. The candle closes above your area of interest. So we know above our area of interest, candles are closing above. That means buyers are more in control above that area. If we get retests and rejections of that area, we can continue to push above, as long as we don't get candles to close below, which is what we were looking at today. We don't want to see candles closing below, because that's what's going to signal that more sellers are in control. We want to get candles to close above the area, like it happened here, like it happened here. Here, candles close above the area, and this is a gap towards the upside, right? So it's the candle closure that gives us that clue. It's not always going to give you that clue, because sometimes a price action will just simply melt, like it did right now on us, like it did right here. Like here, they had no candle closure below. It just melted and closed way below. But it still closed below another area of interest. So you know, as long as we're getting candle closures below our area of interest and no candle closures back above, because if it's above, that means we're building this as a support. We need candles to close below. What do you get here? Candle closures below, no candle closures back above. And what do you get? A push lower until you close back above. And look at where you closed in this candle, back above a previous area of support, back above an area that in the past you've seen buyers stepped in. Look at the candle close above that area. Look at the retests and rejections and failure to close below. And then look at the push up. You see that? Based off of candle closures and those clues. So that's what we were doing today. Today we saw candle closures above our area of interest. So above our area of interest, we know, as we've seen in the past, buyers are likely to step in as long as price action stays above our area of interest. We just know at that point we needed to break above these highs, and then we can potentially correct that move. That was the main idea for today. But what happened today? We had further escalations in the Middle East, which again, right now, if you guys go on Google and you look that up, look up Iran war, or Iran war live updates, you're gonna see that we just had more escalations, things that are going against that bullish bias, which is literally what we talked about the beginning of the stream. Like, let me know if you guys remember me mentioning that. All right. So again, this is to prove it's not all about technicals. It's about having that balance and that understanding. And here, once again, we had that understanding. We had our technicals aligned. We knew very much where we needed to trade below, right? Which was this area. The only thing is it happened in minutes. It happened in minutes because of the fact that it came from a fundamental event. It was a fundamental push that pushed price lower, you know? So again, I'm pointing these things out for you guys so that way if you're doing mainly technicals and you see these things happen, don't be bummed out. Don't think like, oh, my analysis is wrong, like that means I'm a bad trader, or oh, I was in buys because we had rejections off of this area and I was still bullish and then price took me out. It's not about being right or wrong. You have no control over what just happened in the Middle East. You have no control over the phone call or over the strikes that just took place in the Middle East, you know? You have control over where you put your stop loss, over where you know your bias is gonna be invalidated. And what did we have pointed out earlier? We knew very much if we start to break those lows, we know from a technical perspective, momentum can pick up and we can do a full correction. Notice how price action goes precisely to where we have marked off. Again, not to boast the technicals, but to show the importance of having those key levels marked off based off those candle closures that I was just explaining to Marcio. Again, this is a key level. I'm not saying that price action has to stop there. For all we know right now, it just paused, and then before you know it, it's gonna be gone and it's gonna just continue to melt, right? We don't know that. But we follow the clues, we follow price action, we follow what the market tells us. Again, today, a little bit difficult because of the fact that it happened so fast and it was a fundamental event. You had to adapt to that very quick. You know, if you missed the breakout, the retest came aggressive, and then again, another push lower. And now you just take it level by level as it is. Going back to what we said at the beginning of the stream, this was a significant area of interest because of the fact that it was the last low point that got created before creating this high. So we know above this zone, bullish. Anything below that area, we're back to being more bearish on all time frames, because remember, the daily was bearish, 4 hour was bullish above our area, 1 hour was bullish above our area. Now we've broken that. How did we break that? Through a fundamental event, right? Not saying that it's always a fundamental event, I'm just explaining that's what happened today. Today we had a fundamental event going against that bias, going against that, pushes price lower. And let me ask you guys this. Why did we push? Why did price have such a strong push last week? I want to know in the chat if you guys can answer that. Why did gold have this strong push in price action last week? Why did we shift out of that structure? Was this a technical reason? Was this an engulfing candle? Why did gold last week has such a strong move? Why did dollar last week had such a strong move down? Why were they correlated last week? One went up, the other one went down. I want to know why is that. I want to see if you guys were paying attention. And if you're paying attention to today, you are going to know the answer. Let me see, Giovanni. So I guess you don't believe once a fair value gap has been mitigated, not broken, it's less likely to hold support or resistance once price comes back? No, I don't believe in those things. If that's ICT, and again, not to say that ICT is bad, but for me personally, I don't have a good experience with ICT. ICT tries to explain the market through a made-up strategy, when in reality, the market is already explained for through price action and fundamentals. Like what happened right now was not an ICT concept. I want you to know that. And I say that with full confidence. You know, I can look directly at the camera and say that. This was 100% fundamentally driven. The push down today was 100% fundamentally driven, okay? That's what I'm saying confidently. It's not an ICT concept. It wasn't a fair value gap. It wasn't price mitigation of this. And again, not to shit on ICT, it's just the truth. I'm just providing awareness to you so that way you know. If you go and you look at Iran war live updates right now as we speak, you're going to see that we have fresh new updates talking about further conflict going on in the Middle East. And we understand very well that further conflict in the Middle East equals to inflation pressure. Do I need to break that down again? Inflation pressure equals to a potential more hawkish Fed. More hawkish Fed, higher interest rates, that has been pushing yields higher. What are we seeing right now? Look at yields. This is not, you get me? This is right here in front of your eyes. Yields are pushing. Dollar is pushing. US 30 is dropping. Gold is dropping. That's 100% fundamentally driven. Nothing else right there. So that was my issue back in the days with ICT. That it was like trying to explain the market in a completely made up concept, in a completely made up way that was disconnected to the reality of what was actually driving price, the fundamentals. You guys have seen me break that down over and over and over again. AD, if I was giving a giveaway today, you would have 100% won that because that's facts, exactly. The fundamentals, the peace talks that we were getting, the potential. Remember that we said that last week as well? Did we not say that? We said, guys, this is not even a deal. It's not even solidified. It's not done. This is something that's still possibly going to happen, but the market moved off of that possibility. And what did I tell you guys? Yo, we literally broke this down. I wish I could pull that clip back. But I told you guys, this is a potential for a deal to take place. Not that it was done, but there's the potential, right? We also then said, because it's just rumors and just potential, if we continue to see escalations, what is that likely going to do to that price action? It's probably going to flip that. So again, let's take it level by level. What do we need to see now to continue following through on that now new bearish bias? Because now we have fresh new fundamentals in our favor. This doesn't mean marry the fundamentals, but we now can look at these zones and understand where we need to sell from. We now can look at these zones and we understand, well, if we look at the daily time frame, right? We're looking at the daily. I think I have you guys. Yeah, you're on the right screen. If we look at the daily time frame, like we said earlier, daily was already bearish because this was that last lower high point, which is, again, this is the low point. Where did that come from? Right here. So we knew on the daily, still bearish. 4 hour, above here, bullish. But now we're on the bearish side. So that means below this area, that still continues to be that sell zone. It's just a lot more helpful now that you have fresh new fundamentals. Again, doesn't mean marry the fundamentals, but it does mean now if we can trade and stay below 4,500s, again, ask yourself, what has price done when it has stayed below the 4,500s? Sorry about that. And when you look, again, all based off of price action, because just because right now we got fresh new fundamentals doesn't mean marry the fundamentals. That's what I always think. I always think so more. Use that fundamental information to your advantage, but then use the levels and price action to your advantage as well. Take it level by level. So you got this zone that you got to break those lows. So we know it's a simple low point. We know below that area, we've seen moves to the downside. We saw the candles close below, the retest, the failure to get back above, a flush to the downside. We saw that continuation towards the downside there. So we know that's for one. The other one is we would have to stay below the 4,500s, which is this area as well, where in the past we've seen anything above 4,500s, we bounce, right? We bounce above the 45s. So that means if we're back above 45s, I don't want to force sells. I want to make sure I get my confirmations below my area of interest So then I can continue to sell the market. So 4,500 becomes a new sell zone. We're about to see more candle closures below this area, like the 15-minute candles closing below the zone, right? So little by little, you can see how sellers gain way more action below your zones of interest. Again, take it level by level now. Make sure price is not above the 4,500s. And so that way you can stay now on the daily bearish. 4 hour below the 4,500s is bearish. 1 hour below the 4,500s is bearish. You get me? Align those in your favor and you're gonna have price action and fundamentals in your favor below 4,500s. Make sense? But yeah, AD, absolutely on point. Fundamentals, the peace, the treaty talk. Edward, interest rates, it's in the answer, but I was looking more so for the actual cause of this push up. It was more so what AD said, the peace talk. The rumors that we could see some more deals being made when it came to the Iran war. That was what pushed gold so much higher. What happened to US 30? US 30 se fue. But all right. Yeah, US 30 also, as you can see, it gave another push below, a retest. Let's see if that retest can hold below the 50,925. So if this retest area can hold and we continue to break those lows, US 30 very much, you guys already know. It was crazy that as we were breaking down US 30, that was happening. I was like, what the fuck? That's why I went quickly on my computer here, on my iPad, to just you want to make sure you're aware. You want to make sure you're ready for that. But good stuff adapting there, guys. Let me see. But yeah, US 30 sold off. Gold sold off as well. It's having now reactions at this zone, so it's definitely pausing. SWO, that's also a good answer. A brief a dip in the US dollar, but the reason the dip happened was because of the rumors of the peace and treaty talk. So still AD has the best answer, and it's what it is. But I appreciate you guys for answering. To my understanding, the correlation between dollar and XAUSD are opposites. So when the government prints money, it weakens the dollar. Therefore, gold went up and dollar went down. That's I'm not sure if that was your answer, but that is very true what you're saying. So one of the reasons why the dollar will weaken, it's almost as if they're grabbing that dollar that's becoming weak and then using that dollar to buy other assets like gold. You get me? Let me see. Jamani, I hope I'm not saying your name wrong. So, by the way, first time here, or have you joined the lives and haven't talked in the chat? But I appreciate you for being here, bro. And again, I didn't mean to come at any sort of ICT or anything like that. I'm just very passionate about technicals and fundamentals and like that specific type of work with the market. So I'm always gonna be an advocate for that. I know for a fact, if I tell you, hey, look, study technicals, study price action, study the news and the fundamentals, and you're a trader, I know for a fact I'm not pointing you in the wrong direction. For a fact, there's no way. If you just learn price, because through price action you learn about candles, candlesticks, candle patterns. Even though I'm not big on patterns, I'm still very much aware of them, and I understand that the market does create a lot of patterns, and it gives a lot of opportunities through that. But I know for the most part, like we saw today, a lot of these patterns are created because of the fundamentals. The patterns happen after that. You know, the patterns help you understand, but again, that's through studying price action. And again, the fundamentals, they give you that why, they give you that reasoning. Not the automatic, let's sell gold or let's buy gold. It's not an automatic signal, but again, it gives you an understanding and it gives you the awareness of what is going to influence price. So now you can look at levels a little bit different with more confidence. You can look at a level and say, I want to sell there or I want to buy there, versus you looking at that level and thinking, I got to wait for price to get there and see what I'm going to do, you know? If the Federal Reserve decides to raise interest rates, gold will most likely drop and dollar will go up. Yeah, that's also true. So in terms of basic definitions, you guys got some things on point, which I'm glad to see. Believe it or not a lot of people know those things. And believe it or not, that's very useful information. Like before you know it, you're gonna see an FOMC come out and you're gonna have a little bit more understanding and you're gonna know, wait, I know what that means. And you're gonna look at the market and have that understanding for what that may mean. And when you see the market move that way, it gives you a little bit of that more sense of understanding. Again, so you're not completely lost. That's why when this was happening right now, as price action was melting, I knew for a fact, hold up, this is not just price action, something is going on. It was happening on gold, on US 30, and on dollar at the same time. There has to be something, you know? See if anything else came out in the past couple of minutes. US 30 having a little bit of pushback off these lows here. Just on US 30, watch if price is trading back above the 50,930s, because at that point you're back above an area of interest and you wouldn't want to get priced to get here, get back above that zone, and like we've seen in the past, it bounces and then buy or step in and push price higher. We want to make sure we can clear that. And also, Marcia, going back to your question of candle closures, again, it's things they use for probabilities, okay? Remember that's what trading is about. It's about probabilities. Don't kill yourself trying to look for certainty in the market. Because when you look for certainty in the market, too much of it is gonna be bad. Because you can never have that. Like look at today. Today's a perfect example of that. You know, we had a lot of things in our favor of those buys above our area, right? But anything can happen, and just that, as we were approaching, like funny enough, as we're approaching an area of support on gold, this happens, and then gold has a fundamental event, and then it melts, and it pushes below your zone, you know? Almost like it was perfectly timed at the area of support. And then right now, structure is still being respected, lows, highs, a new low is being created at our area of support that we know we need to break below, and we'll just follow this momentum until it dies out. When will it die out? When these previous highs that get created for us start to get broken back above, which is what we were doing, what we were looking to do over here. We wanted to see this momentum die out as it was doing momentarily, shortly, because you started to break above this high. Price action was failing to create new lows. You were breaking above. But then again, we have fundamental information come in, and then price action melted. And as you can see, the influence afterwards has been just very clear. Yeah, for today, we'll keep it on gold and US 30. No UJ today. First time here? Okay. No, I appreciate you for being here and for being active in the chat as well. That's always good to see different perspectives. I use Fibonacci in line with market structure, candlestick patterns, and moving averages for more confluence. Okay. Okay. No, I thought you were more on the ICT side just based off of what you asked earlier. But I used to use a lot of Fibonacci's as well, until I just got really good at using market structure, and market structure is good enough, in my opinion, for me at least. That's what I've learned, you know, just to keep it so much more simple without putting any sort of belief on any indicators. Again, that's me and my own personal experience. I know that there is plenty of traders out there that will use fibs, or also like EMAs I've seen will be a good one to use for more confluences, just like you're saying. As long as you know what you're doing in terms of like, okay, this is a confluence, this is probabilities. I've tested these probabilities. I've seen whether or not this is valid. That's where your work becomes undeniable, and you need to obviously, you know, protect that. You can't let others steer you out of that thought. If you know that's what you do and you're good at it and you've done it before and you have the experience, that's what you have to stick with. It becomes a problem once you start to write up in your trading plan that, you know what, every time I write up a Fibonacci and price gets to my area and I just enter a trade without thinking about it, I lose. You know, there you start to think about it, because now it's like, well, you know, if I'm gonna use this Fibonacci tool to excuse myself into taking a trade anywhere, then why use it if it's not doing me any good, you know? Same thing with patterns, like candlestick patterns. If you know you're using candlestick patterns, but you're putting too much significance on them and you're basing your trades solely on the candlestick patterns, it gets to a point where you're like, okay, I'm over here trying to look at, you know, head and shoulders, teacup pattern, and turtle soup, you know, and you're like, what am I doing, you know? Again, you want to make sure it's something that you stick to every single day. Gold is breaking those lows as we speak. And right now we also have, we'll end the stream after this PMI report. I want to see if this PMI report will bring in any more volatility. Because if we see a very strong PMI, then we could see even further sells on gold. You know, because we'll have a even more reason for dollar to turn more bullish. Turtles. That's a thing. Marcia, that's a thing. I'm not making that up. That's why I said it. Those are like candlestick patterns. I don't think it's beneficial. You know, I'm not sure if you guys have seen, but there's like dictionary books on candlestick patterns. I genuinely don't see the benefit in that. I don't think there's any benefit in that. Because imagine trying to memorize all of those patterns. Then what are you gonna do? Are you really gonna look at all of those patterns and really only look for that each time? Like, there's so many patterns, you're gonna go crazy trying to memorize all that. If anything, memorize a few patterns and then master those patterns and then go for that. Like, if you know you look at, let's say you're looking at reversal plays or like rejection plays, then study how those rejection plays happen. And then maybe the patterns that you want to focus on is I don't know, keep it simple, a double bottom. You want that every time price reaches an area of support and you get a double bottom on the 5 minute, that's when you enter. That's the market pattern that you're paying attention to, versus paying attention to the same market every day, but then I'm in my head thinking about 25 different market patterns, trying to validate each market pattern that I see to take a trade. Because I'm thinking, oh, price is doing this pattern, it's gonna do this. And if it's doing this pattern, it's gonna do that. Remember, there's no certainty in the market. So if patterns rely a lot on that certainty, that the fact that it's like, well, if we do this, we're gonna do that. If we do that, then we're gonna do this. That's what patterns is about, which again, I don't think it's 100% true. Because what do you do on the days like today? Say today you had a great, beautiful pattern, and then you have a fundamental event that comes in. Something that's not planned. This is not something that was on the economic calendar. It's not like today we saw that at 9 a.m. today, there was gonna be further violations of the ceasefire, and the negotiations were gonna look like they were gonna fall off, and the market was gonna sell off. We don't get that. We didn't see that. You get me? So if you're only looking at technicals, only looking at patterns, and this happens, how do you explain that to yourself? You're just here like, I don't know. You have no idea why gold could continue bearish. Not that it is going to continue bearish, but you have no idea why it can continue bearish. Therefore, you're not expecting for price action to trade below the 4500s or below the 4456s. Maybe you're looking at this area and you're thinking, I'm gonna look at this area as an area of support, and you're only looking at buys, when the fundamentals just told you that it's most likely that sellers are gonna be more active. You get me? Only tweezer tops and bottom evening stars and morning stars. You see, that's where you lose me. I have no idea what that is. But I'm sure if we look at it, in terms of price action, it'll be something fairly simple to understand. Again, for me, I kept it super raw because I used to go that route. I used to go the route of only technicals, a little bit of ICT, you know, and like really only trying to focus on that. I was also someone that thought fundamentals were overcomplicated. I thought it was too much until I really started to gain that understanding. You know, so that's where you lose me, because I'm like, you know what, I got to a point where it was doing me more harm than good. So I just decided I'm gonna completely forget about that type of information. Almost like I had to unlearn the skill of trading to relearn about it, which I remember going through that process, and I was genuinely annoyed because I had spent a lot of time, you know, a lot of hours studying patterns and this type of thing. I think I know what you're talking about with like, oh my God, I forgot what pattern. I used to look for a pattern that had like the hammerhead. It was like a hammerhead candle strategy. It was not good. Not for me, at least. Look at oil as well. That's another tell right there. How you know, even without looking at the articles, look at the volatility that came in on oil. It was all combined, all at the same time. You notice that? How it was like the transactions get made and the markets move right there. The money goes from one place to the other. It's literally transactions, just back and forth. So what we're trying to do here is learn to follow the money. That's literally what we're trying to do. We're trying to learn how to follow the money. It just so happens that the money gets moved around based off of what happens in the world. Do you guys notice that? Oh, and the PMI report, yeah, it's 10:01. Let me see, I'm just trying to read the chat. Oh, okay, it wasn't refreshing, but it looks good. All right, I'm caught up there. Let's see, so no reaction, just based off of what we saw on the last minute. No reaction from this economic report. 54%, so a little bit higher. So it's still good for dollar. So we have 54%, or sorry, 54 above the forecast. So we have a stronger report. If anything, this is still more bullish dollar. On gold, let's break this down because we don't want to get extremely married to gold sells. Let's make sure we're objective and let's look at this like professionals here. So we got okay, that's good. So remember, we had our buy ideas getting validated because of that fundamental event that came in. The market dropped, and as you can see, after that drop, this is on the 1 minute, by the way. We're looking at gold on the 1 minute. We have our low, our high, low, high, and now we have our new low. That means that price action can pull back all the way into here, the 44.72s, and still be on this bearish momentum, okay? So that way we can go all the way here, still reject, say double top pattern that we're talking about patterns, and then we look for the continuation. And we'll want to see the breaks below the lows. Guys, by the way, you're gonna see me do this almost every day. Based off the fundamentals and the technicals, we align it almost the same way. We prepare ourselves in the same way. Because remember, we're building consistent and repeatable actions. We're building habits that we know we can continue to follow. Price action, for the most part, doesn't fail us, because even when it goes against us, like even like today, look at how it went against us. Say we were blinded to the markets and we were only looking at candles. Price, for one, it broke the lows and then it retested and it failed to break back above. What is that telling you right there? Just based off price action, that more sellers are in control based off the price action. Of course, we have the fundamental information, but say we didn't have that available right away. We know very much so that sellers were in control based off that strong break, based off the aggressive retest that failed to even retest or failed to even break above, right? We just stayed below our area of interest there. And then we had another final push, right? And then obviously we're still continuing there. So based off technicals there, we can follow that. We know that we'll start to go against that momentum if we trade above this structure point on the lower time frame. If we break above that lower time frame structure point, we know that the exhaustion at these lows is strong, and we're likely at that point to do a deeper pullback into the 44.95s, where that's our sell zone for us to continue looking out for sells. Wouldn't really be worried about any sort of buys unless we're trading back above those 4500s, which we would need, again, candle closures back above. So I think at that point, just be extremely patient for those buys. Buys at these lows, you're going against the momentum, you're going against the fundamentals. You're only buying at the lows because it's at the lows. So unless that's what you do, then by all means, to each their own. But just based off technicals and based off price action, based off fundamentals, it's a very aggressive buy to buy right here. Just like it was very aggressive to try and buy right here, or very aggressive to try and buy. If you're trying to buy every new low that gets created, you get to a point where it's like, how do you know when each low is going to get created? Are you a market wizard or something? You can't just sit here and guess and try and guess every low, because we know that's going to be very difficult. That last drop at the previous lower high, this was an evening star pattern. So I'm assuming this right here, the fact that price, this for me, I just look at it as a rejection candle. You see, I put it into one simple meaning, which is it's a weak body with a large wick that pushed towards the upside. So what does that tell me? That means that whatever buyers were trying to push price higher were overpowered by the sellers, and price closed bearish with a large rejection wick. So it's just a rejection candle for me. You get me? So you see how it's the same market, a little bit of a different perspective, just based off of your candlestick patterns and then my price action knowledge. Okay, but guys, give me just 1 second, please. Simple 3 candlestick pattern. Oh, okay. Oh, maybe what you're talking about is the 3 then. So you're talking about one bullish, one bearish rejection, and then one large bearish. That's the pattern you're talking about then? Okay, makes sense. I can see how that does happen a lot, definitely, especially off of the retest. Okay, I get you. You see, that's what I'm saying. Like if that's, if you're focusing on 1 to 2 patterns, and you're focusing on, let's say, for example, you want to get a break and a retest. And I'm just making an example up for you right here. Let's say you're looking for breaks and retest, but you combine break and retest with the evening star pattern, meaning you need to get for price to break lower. Then on the retest, you want to see one bullish candle, one rejection candle, and then one engulfing large bearish candle, right? That's what you would want to see. So if you can combine still the break and retest with one pattern, again, I can see how people can make that happen. The problem is the people that are looking at 25 different patterns, 50 different patterns, studying the book of patterns. That's where it's like, what are you doing? For what? It makes no sense. But here, again, I can see how some of these patterns, especially like for me, the one that always stuck with me was the double tops and double bottoms. I never used like head and shoulders and things like that. For me, it was always, double bottom. If I'm looking for rejection plays, I'm looking for price to do double bottom, triple bottoms. I need to see the signs of the exhaustion. How do I get that? I get price by getting to my area twice, it rejects, and then I look to take a trade. Or the double top. That means if I'm looking for price to reject an area, I want to get the double top pattern. Whether price makes a higher wick and then breaks lower, it doesn't matter. I'm looking for that. So I get my bias and my ideas from the fundamentals, the technicals, You know, once I have that lined up and I understand where the market is probable or likely to go, then we mark off we mark off our zones. We mark off the zones so that way we know where the most ideal areas to trade are, because that's what we mark zones for. The zones are not just random. The zones are so we understand where it was likely to have a decent move off of that area. Like if we look at the zones that we have marked off, we have the highs and the lows, so that way we know if we're looking at a sell, we're looking at a sell from a high point based off of previous proof that we have seen sellers off of this area. So we know when we reach that zone and we still continue to get rejections, fundamentals are still bearish, buyers are clearly failing to trade above, I'm going to take a sell off of that area and look to get a move down into previous lows. You get me? So I appreciate you sharing your perspective. Actually made me think about a few things, but yeah, the keeping it simple for me is what has worked the best, because as you progress and as your trading plan progresses and you get better and you gain more experience, you make it more and more simple, because I think at the beginning it's a little bit complex just by the fact that you're doing something that's new. You're trading a market that's very, very difficult, but little by little you'll see how whether you have to remove one indicator, add one, or remove two indicators to maybe only focus on price action, whatever the case may be, it progresses. You learn to make your job easier, but first you need to know what you're doing. You don't get to just get onto trading and it's just easy. Like, no, you have to go through the motion yourself, and then it'll be a lot easier for you. But all right, guys, so gold, very nice push towards the downside. Again, fundamentally driven. Those are things that are not in our control at all. But what is in our control was the fact that we had the areas marked off. We were prepared for where we understood where that momentum can shift out of. We broke below, we did that retest on those lower time frames, and we had a nice move towards the downside there, and now we know what we can adapt to. On US 30, let's zoom in here. US 30 looks like it ended up having just that clean push and then a bounce, but we're still very much bearish. Let's just see now with this current 1 hour candle, if we can continue to climb below the lows at the 50,915s on US 30. I would still be bearish below that area right there on US 30. As dollar continues to strengthen, yeah, I would still remain bearish on US 30 below those lows there. Just US 30 and gold today. But yeah, guys, unless anybody has any more questions, I believe we can call it a session. We did today a very long stream. Usually we do like, I think 80 minutes, something like that. We go about 80 minutes, 90 minutes. Today we're at 103 minutes right now. So we're well above our mark. But it was fun. Today we had a lot of people in the chat, so I appreciate you guys. For those of you that are new to the stream, I hope that you were able to learn a thing or two. Just know that we are here every single day, live, Monday through Friday. If you have any questions about the broker, remember that there's more information in the description. Again, from my own experience, one of the best brokers that I've worked with in terms of just ease of access, whether it's deposits. For me, I'm very, very clean on the spreads. So again, for me, that's one broker that I will 100% recommend. So if there's any questions, you guys can always reach out to the Instagram. You have my Tarzan Trades Instagram as well. Again, any questions, I'll be happy to help, guys. But other than that, quickly take a look at what we have for tomorrow, and then we'll end our stream. So yeah, tomorrow, job openings, 10 a.m. Eastern time. I will see you guys at 8:30.